It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Monday evening, August the 29th, 2016. We only have a few more days left in this, what has been an incredible month of August, which means we expect more volatility, more trading opportunities as traders and the markets try to finish the month off in the green. Crude oil is bullish while the S&P, gold, and euro are bearish, going into Tuesday's trading session, which is certain to be another great opportunity for traders who know how to follow tonight's plan. I have an incredible newsletter for you guys tonight. Excited to break into some strategies for tomorrow. Before we jump into our charts, though, don't forget the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're on our YouTube channel right now, not to worry. There's a link in the description of the YouTube video. Follow that link. Come over here to the blog at Sideways Markets and watch the full-length version with all the analysis on all four markets. While you're here, don't forget, join the mailing list. I'll send you an email every evening when this nightly news is ready to be watched. Below the video tonight, you can download all the charts you see music in tonight's video. Over on the right-hand side, don't forget, you can grab a free pass. Come out and join me in the trade room as a guest. If you're not a member here at School of Trade, grab your free pass in the upper right-hand corner. Join the trial membership. You'll learn more with me in 1 week on my free trial than you will anywhere else on the interwebs. And don't forget, I'm always here standing by to help you guys out 24/7, 365. If you have any further questions for me, hit me up on the live support button on the right-hand side of the blog. Hope you guys had a great weekend. Boy, oh boy, Labor Day coming right around the corner. Before we get there, though, we got a busy week ahead of us. Let's take a look here at the schedule for tomorrow, of course, Tuesday, August the 30th. There are 31 days in the month of August, which means we've got two more trading days left in the month of August before we go into the holiday weekend and, of course, the month of September. Don't forget, the month of September is notorious for being that time when we see the volume come back, that shift from summertime trading into fall trading. September, October, November, December, January, February, and we can't forget about the month of March. Those are the best months of the year to be a day trader. Lots of volume, lots of volatility, right? And we are looking forward to this month of September. Looking at this for tomorrow, though, no major news coming out of Asia or Australia tonight. Nothing to worry about there. Early morning tomorrow. And really, for the most part, really, we look at this Tuesday, August 30th, there's not a lot here on the schedule really for tomorrow. You're looking at 5 a.m. economic sentiment from the EU. You're looking at 9 a.m. Case-Shiller, 10 a.m. consumer confidence. Really, most of this stuff, though, is not anticipated to be a very big market-moving event. The big red star news of the morning tomorrow morning, Tuesday morning, will be at 5 a.m. regarding the economic sentiment, right? So if you're going to be in London session, don't forget about that news tomorrow morning, again, at 5 a.m. Other than that, though, it's pretty much just some small stuff here, 9 o'clock and 10 o'clock tomorrow morning from, of course, housing and consumer confidence. But I'm not expecting those to have, I'm not expecting them to move the needle very much as markets are clearly reacting more to end of the month. And, of course, a little bit of what Yellen said on Friday, but she didn't really say anything new. She pretty much kicked the can down the road here. They say the window's open for a September hike, but I don't believe her. I'll bet nothing changes here until the end of the year. So, again, end of the month, we always expect to see, remember, end of the day, end of the week, end of the month, we always expect to see more volatility. Why? Because traders who are up on the month or down on the month, if they're up on the month, they're trading with house money, right? If they're down on the month, they're taking bigger gambles to make it back. So we have lazy, profitable traders. We have way too aggressive gamblers on the opposite side of that spectrum. Either way, we expect to see some extra volatility here going into the last few days of the month of August. And, of course, we'll talk about what to expect in the month of September once we get there. For now, though, we get a strategy to plan for tomorrow. So now you have the plan here for tomorrow's session, 5 a.m., 9 a.m., and 10 a.m. Don't forget, we open up our chat room every morning at 3 a.m. Eastern Time for all you London traders, and of course at 8 a.m. Eastern Time in our trade room for all those U.S. best traders. We're looking forward to another great session with you guys tomorrow. Let's go crude, S&P, gold, and euro, and we'll have you guys off to your Tuesday session. Crude oil is bearish and trying to retest the lows of the range this evening. The bears have control, but the recent strong move higher combined with rising support, right, in this trend line is certainly going to give the sellers trouble and the buyers the window of opportunity they need to fill that weekend gap up at 47.29. Sellers are looking for a breakout pullback below 46.89 to trigger the buyer's stops and make a run back to the lows tomorrow, while the buyers are looking for a second try off the lows to prove they have enough juice to fill the gap and try to retest that 47.75, right, that gap fill, and then up to last Friday's last pullback, right, after Friday's collapse. So as you can see right now, couple big clues in the chart right now. I'm looking at this as a gap down over the weekend. Okay, we don't see these very often, but when we do see a gap, they almost always get filled relatively quickly. You'll notice, boy, they just missed that gap fill by, is that a tick? Right? The closing price on Friday was at 29. Yep, that's one tick at 28. Now, you might look at this and say, well, close is close enough, but I find I've seen many examples in my very long career here where close is not close enough, right? We can see also some examples of close not being close enough on some other markets tonight as well. We'll take a look at that in just a second. So gap down over the weekend. They did not fill the gap. That means 47.29 is just hanging out there right now with unfinished business for the buyers. Now, I see this really as a spike in channel, right? The gap down is a spike down, and of course that goes into a channel. This channel being best drawn off the low really confirms that spike in channel. With that spike in channel, it gives us a bit of a correction zone, right? The first pullback, the high of that channel. And so we know now we have recently tested, right, in that correction zone. So, of course, test the correction zone, price should be moving back down to those lows, right? That's the way it goes. Well, not so fast. Combine that unfilled gap with this rising support trend line, and you can easily see this support trend line really has been the biggest obstacle for those bears to get this price headed back down to those lows again. The bears want to get this price back to the low a day at 46.62, and if they want to get the job done, they're going to have to get below that rising support trend line. What I'd like to see is actually get this 46.89 taken out here. Get a strong breakdown. Let's get a different color here, Joe. There you go. Strong breakdown. Get that moving average to come over. Get below that 46.89, trigger in those buyers, and then run those buyers right out of the market with a breakout pullback. There may be a few different variations of this, right? So we may see price break down, pull back, and actually use that trend line as resistance. That would obviously be the most desirable. Again, the most important thing though for the sellers is I want to get below that trend line, but I also want to take out this swing here at 46.89. Why do we want to take that swing out? Because we assume that there are buyers waiting here. Right? We assume there are buyers who are waiting. We assume there are buyers who are thinking the exact same thing that I am. And so, of course, buying there, it may not hold that pullback back to the trend line and gives the buyers a great chance to buy on the dip, to buy with a trap low. So what I want to see here is, and of course, you can imagine what I'm looking for the buy side here, right? So as this price goes lower, I want to see him take out the 89. Again, it may just roll right over and give us a nice strong sell signal from there, or it may quickly jump right back up and then hold that trend line for the next move lower. That's what those sellers are going to be looking for here. Now, what about for the buyers? Well, this is the first candlestick of the session here coming right out of the overnight, that 45-minute period where the electronic session closes. So I'm not too keen on buying this first move. Never a very good idea to buy the first candle of the session. So what we'll look for is what we call a second try off the low, right? So a second off the low. I want to see, right, a green candle looks great, but show me you can pull back and show me you want to keep going. That's what we're looking for in the short term for the buyers as this price keeps going higher. Ultimately, as long as we can stay above that trend line, we'll keep looking to buy those pullbacks going up to fill the gap And then once we get that gap fill, I want to see continuation here. That's the big thing. We want to see continuation through that gap fill and then keep that price going. What we don't want to see is just a little test of the gap fill and then immediately see this thing collapse right back down again. The sellers will be happy, but it's not what we're looking for the buyers. So as price goes higher, little breakout pull back, what we call a second long off the low in our trade room. And then, of course, once we do get to that gap fill, I want to see some strength. And when I say strength, what I really mean is a strong enough push to be able to get that moving average above, right? So again, not the first move higher here, second move higher, and then, of course, get through that gap. Show me this wasn't just a ruse to get the sellers a better price to sell. Show me that strength through 47.29, and then we can finish that move up to that 47.75. Now, also for the buyers, don't be afraid here to look for that trap low too, right? Trap low, seller failure, and then right back up again. That'll be another option here as well, as this, of course, tries to break down and then stay below that trend line, right? So buyers here have a small window. They can catch those sellers. And again, what you don't want to do though is see a real strong push down and then try to do it that way. What I want is, I want a little tiny push lower, just a little bit below that 89, right? Seller failure, and then back up we go. If they really push this thing with strength down, it's going to bring that moving average down and give those sellers a chance, right, to finish that job right back down to fill that measured move, right? Double down target there at 46.28. So really, it all depends on what happens in the next few candles. If they can hold above this trend line, in all reality, the buyers should have no problem getting this price to fill that gap. Then it's just pinpointing your entry, breakout, pull back above the gap fill. If it does pull back, a small little pullback will be a buying opportunity, but be aware though, a strong breakdown will give the sellers that window they need to sell this thing right back down to those lows. This should be interesting to see right now. Sellers are trying to go back to the low. Buyers have their eyes on the gap and then up at 47.75. That trend line, that rising trend line, is going to be the Achilles heel for those sellers, and of course a gift for the buyers if it can hold. How about the S&P? Even the S&P is bullish and trying to retest the highs of a spike in channel this evening. The bulls have control and will be looking for a breakout pullback above the following resistance trend line, but with such a strong move higher today, they may pull back further into the correction zone down around that 21.76 to get more buyers into this move and then look for the move back to the highs from there. Sellers have a tough job right now because, with the strength of this move higher here, the sellers have to be careful. Any pullback off the highs will likely be seen as a buying opportunity until we can get down, really break down below that battle zone at 71.25 tomorrow. So the bears really need to be patient right now. I have a bull spiking channel. This bull spiking channel here would start the gate out. What is really amazing is when you look left on this chart, right? Here's the Yellen apocalypse, right? And if you listen to the news media, you would think this market is going to zero tomorrow. This is just one of thousands of examples we see every day from the news media. The news media is lying. Well, they're not lying. They're just simply trying to sell advertising. And the only way for them to sell advertising is the most effective way is to scare you. And so we have to be careful of that. Turn off the television, turn off the news media, right? Cancel out Bloomberg, CNBC, get those things off of there and look at the chart. The chart will tell you what's going on. This was all fueled, right? This is all fueled by speculation, right? After last Friday's Yellen speech, right? This is all fueled by speculation. As you can see, though, the wise traders in the market viewed it as, with a long-term bull trend, viewed it as a beautiful buying opportunity, right? Very good example of how we always say, news is noise, right? Find that trend that happens after the news comes out, find that trend and follow that trend. As of right now, you can easily see this market is in perfect health, right? Clearly there's no demise anytime soon. Buyers saw this as just simply being, right, nothing more than a beautiful buying opportunity with those all-time highs just waiting right up around Right, you can see those all-time highs just waiting up there above that 2190 area. So with a big bullseye up at the high of day again right now, trying to regroup what we lost on Friday. I would imagine buyers see this as being a great buying opportunity until we get to that triple up, right, and that measured move target overhead, which of course will be right back to do all-time highs again.